Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock, with news events are compounding to push commodity prices to unprecedented levels. At the same time, investors have found their risk appetite again. In congressional testimony, the head of the Federal Reserve came out in support of a 25 basis point rise at their meeting in mid-March. US mortgage applications fell again last week and their key benchmark interest rate rose. Their benchmark 30-year fixed is now at 4.15% plus points. And the February non-farm payrolls report is due out on Saturday in New Zealand time, and a gain of 400,000 jobs is anticipated, which is slightly less than for January. However, today we got the precursor ADP employment report, and they revised up their January data and said that the February data was going to be at 475,000 new jobs. Gains were reported across the board in all industries, in both service and manufacturing sectors. But the one group that is missing out is SMEs, where employment shrank, especially for micro firms. The Canadian Central Bank reviewed its policy rate overnight and raised it 25 basis points to 0.5%, as the market had expected. It was well signalled. It is their first rise since the emergency pandemic cut they made. And China has explicitly said that it is working to meet the high standards of the Trans-Pacific Partnership. It expects to join when it qualifies. An even bigger clash with Australia looms on that, and that may separate them from most of the other CPTPP members. And the annual inflation rate in the EU rose to a fresh record high of 5.8% in February from 5.1% in January, and above the market expectation of 5.4%. France's 4.1% is the only major economy there lower than the average. And prices for all the key items sensitive to the current Eastern European crisis are all rising sharply. Hard commodities like oil, natural gas, lithium, aluminium, tin, nickel, coal and potash are all up very sharply. Soft commodities like wheat, corn and other animal feed products are rising fast too. Most of these now are at either record highs or decade highs. Unless there's a sharp retreat soon, and that looks pretty unlikely at present, a new commodity super cycle has gotten an outsized start and will drive inflation and economic instability for years. In Australia, the populated East Coast is suffering from a major rain event, grinding economic activity to a halt there until it passes. Earlier, their economic activity expanded by 3.4% in the fourth quarter of 2021 after the reopening from Delta lockdowns, which were centred on New South Wales, Victoria and the ACT. This follows a 1.9% contraction in the third quarter of 2021. And the US Treasury 10-year yield opens today at 1.84% and recovering 14 basis points of the 16 basis points it lost yesterday. And the price of gold starts today at $1,920 an ounce and down $14 from this time yesterday. But oil prices are higher again, up by $2.50 a barrel. In the US, they're now just over $106.50 a barrel. The international Brent price is now over $109.50 a barrel. And the Kiwi dollar will open today at 67.7 US cents and a marginal rise. Against the Australian dollar, we're at 93.1% and a marginal slip. Against the euro, we're at 61 euro cents, and that's a marginal rise as well from its recent higher level. That means our trade-weighted index starts today at just on 72.6 and a new 5-week high. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.